This is a call that RBS, the Royal Bank of Scotland, made early last year. The Royal Bank of Scotland told their clients to sell everything, to brace for a cataclysmic year on the markets. We were going to see at least a 20% fall in global stock markets, a commodity crash. It was going to be total disaster, cataclysm. Sell everything. The media loved this story because it generates the fear button. And the fear button is the most effective button that you can push. This got a lot of publicity. But you know, Royal Bank of Scotland were actually bailed out by UK taxpayers after the GFC. So 8 years later, they're going out there making forecasts, still paying themselves a bonus with taxpayers' money to scare their clients out of selling everything. And that's what generates hits. Okay, it was a big call to make, but it was also an incredibly wrong call to make because this is what we saw across asset markets last year. Australian value stocks were one of the best performing asset classes in the world. Value is one of those ones that Robert mentioned. That's low relative price stocks. Some years they do terribly, other years they do very well. Over time, they deliver a premium over the market. And that's what happened last year. So if you'd taken that group's advice and sold everything at the beginning of last year, they've actually taken an awful lot of money off you. That really makes me angry. There was a sell-off after Brexit, it's true, but then the market came back and all the major indices hit record highs. Australia didn't, but the UK, the US market, many European indices hit record highs. Even bonds gained for the year. So it wasn't a cataclysm. The media are more inclined to speculate because it's finding it harder and harder to get people's attention. Remember how I said the attention's the important commodity? So when Brexit happened last year, the day after, it was a bit of a shock to a lot of people, to the markets. The market sold off, and the Australian ran with a headline that the UK was heading for a recession after Brexit. Now, 3 months later, The Times, which is also a part of the Murdoch publications, strong UK economy confounds predictions of Brexit doom. What happened was the pound sterling went through the floor. The UK economy became super competitive all of a sudden. And a lot of those companies on the UK market who get their earnings offshore, the exporters, did very well out of a weaker sterling. Of course, no one really predicted that, but it actually worked out quite well. And by the end of last year, the FTSE was hitting successive record highs. So if you'd sold after Brexit, you would have got it completely wrong if you'd taken the media pundits' analysis of the situation. And it was exactly the same with Trump. So before the election, Trump looked like a disaster. Many people still think he looks like a disaster, but the market is a different thing. So the stock market will fall if Trump wins, said Fortune magazine. Trump win would sink stocks, said CNN Money in October. And then by the end of November, or by November, Wall Street welcomes Trump with a bang. And the US market has hit successive record highs. Is this an endorsement of Trump? I don't think so. I just think the market is probably liking the fact that there's a Republican-controlled Congress and they're passing what's perceived as business-friendly regulation and legislation. But the market has gone on to a succession of record highs. Again, be very careful about media who tell you what's going to happen based on a news event. It's almost always, in fact, it always is speculation, and it's speculation that's intended to trigger an emotional reaction. And mostly, it's wrong.
The influence the media have nowadays on investors is huge. Papers and online publications are filled with outlooks and opinion. Look, I get it. It's interesting, it's intriguing, and there's an element of curiosity. But the reality is this is simply attention grabbing and pure speculation. It's nothing more. The biggest piece of advice that we give our clients is to link their balance sheet decisions and their investment decisions with their life and life goals. Not what is being published in the financial media, because that is how you beat the average investor.